Okay, we're gonna start another video. My name is Randall Tiongson, and we're gonna really looking forward to start another discussion that I think feeling ko napapanahon. And let me introduce our guest for this video is the one and only Miguel Liboro. He is the. Can you go introduce yourself, Miguel?
Hi, sir. Thank you. So, as Randall pointed out, my name is Miguel Liboro. I'm the head of fixed income for Atram Trust Corporation. I have 9 years experience at this point in the field of treasury trading and asset management.
Okay,
And
so
I'm
you're the
the
guy
portfolio
behind.
manager for the
You're the
Solvivo
guy.
one.
You're the guy who manages the mutual funds and new ETFs of Atram and Soldivo, which is under Atram.
Yes, sir, on the fixed income side.
Okay, I know you don't like to do this, but I'll make yabang for you. You're also managing the best performing bond funds. I mean, fixed income funds, the bond funds. I know it's. I'll make the yabang for you, so you don't have to.
Thank you.
You're what, top 3, top 5 funds today. So you're doing that, okay? So congratulations. And hanggang next year yan, di ba? Okay, anyway, so
Well, we're definitely going to try kasi you can't always guarantee the number one, pero what we try to guarantee is yung consistency,
yeah.
being able to grow the
The
capital.
funds that you're carrying, what are the yields now? What are the returns? As
Well,
of now, this is December, ano ba yan, 2 or 3? As of today, December 3, what are the
As
yields?
of today, December 3, the Solvivo bond fund has returned net of all fees 7.47%.
Wow, that's pretty good. How about the other Atram bond funds?
Well, our corporate bond fund has returned around a 3% net return because it's a different kind of more stable strategy.
Yeah.
And then our, I guess, more aggressive Atram total return peso bond fund strategy has returned around 9.2%.
Oh, even better than the Soldivo. Okay, 9. Wow, that's
The Solvivo is kind of the middle of the two, sir. So we take the active, more aggressive management of the total return bond fund and the stability and yield part of the corporate bond fund and combine that to kind of deliver the Solvivo.
And the reason why I wanted to do this session, not because you're just one of the best, you're the bright guy. So I don't know, you're gonna be awarded top fund manager maybe next year. So we'll see that. Okay, tag me. But more than anything else, you're now performing well on unusually not very popular type of an investment, at least for the as a retail people. Diba? I mean, bond, ako, ano yan, hindi yan kumikita, baba yan, sayang lang, ano, diba? But you proved them wrong. You've done, last year did well for your funds, this year, and maybe up to next year. So basically, you're going to run 2, 3, 4 years of good return on these things. And that's the nature, no? So you're talking about bonds. So generally, for the interest of people, when you say bonds or fixed income, what are these?
We can simplify it. When you
Bonds
talk about bonds,
bonds 101. Okay.
Bonds 101, bonds, all that is it's utang lang yan, diba? You're buying a debt security where you lend money to someone, usually the Philippine government or a specific company or corporation. And in return for you investing or lending them that money that they promise to pay you back at a pre-arranged date, they give you an interest rate.
Yeah.
Because of that. So for example, tumataas or bumababa yan, yung rate na yun, depending on how long the tenor of the bond is. Kasi syempre,
the longer you higher.
Should be higher, diba? Kasi let's say if you lend me money today, and you tell me I need to pay you back tomorrow, it'll just be a low interest rate. Kasi your risk that I won't be able to pay you back is low. Kasi bukas na eh.
Yeah.
But if you lend me that same amount of money and tell me that I need to pay you back 3 years from now, you need to get a higher rate because you're taking more of a risk that something will happen to me that won't allow me to pay you back later on.
Okay. And you're saying that it can be a corporate or it can be the government, the treasuries, the Republic of the Philippines. So they borrow, and the government always borrow. I mean, surprisingly, a lot of people don't know that the government is pretty much insolvent.
The biggest borrower.
I mean, for all accounting purpose, they are insolvent, but that's how they finance things. They just borrow. I mean, we get taxed enough, so we borrow. We maintain a certain level of borrowing. So they do that, and the government borrows, and their general terms of government securities can be short term or it can be mid and long term. Diba?
Historically up to around 25 years is the longest.
Yes. Okay, so 25. So they borrow all of these things, and for the interest of people, the government borrowings are your most secured among all of these things because the government can always pay you. They just print money and you're paid.
Exactly. Or
Tax.
raise taxes, pero sana hindi.
Yeah, okay. Or di ba? I mean, they can always do those things. So that's the thing. So that's why they would also carry the lowest return compared to, let's say, Ayala Corp, SM. I mean, yeah, they're good companies, but they cannot offer the same interest rate as the government, di ba?
Exactly. It's like in our example earlier, pag may pinapautang tayo, it's like lending money. The government is like lending money to your father who
Yeah.
makes more money than you do and
Yeah.
still has a better job than you do versus lending money to maybe your brother who has a good job, which is your strong company like an Ayala Corp, or your younger brother who doesn't have a job yet, which are the other companies that are not as good.
Yeah.
So of course, you need to get more
Yeah.
interest rate or more
You need to
yield
be
for the risk.
compensated for the additional risk that you take.
Yes.
Yeah, but doesn't say that they're risky, by the way. No, some of these are really good companies with a fantastic track record. Although some of them have meron din tayong mga default experiences, di ba? And pero lately that's not happening, no, Miguel? I haven't.
I
Or
think
maybe
that the last time there was a formal technical default in Philippines was back during the Asian financial crisis.
yeah,
We've had some scares naman since then,
yeah,
but
with trust
fortunately,
issue and stuff.
nothing
Yeah. So far, no, so far. So, but
so far.
again, at the end of the day, with the pandemic and everything, people are now questioning whether,
Yes,
yeah,
it's become a more difficult time generally in terms of sentiment for yung corporate issuers
yeah.
because there's still a lot of demand there. But of course, now you're thinking at the back of your mind, if this pandemic gets worse, which it did from before, what's going to happen, di ba?
Okay. So now the bonds. So people buy bonds, but there are bond funds. No, these are not the. These are a different animal because they're but they're ang laman nito bonds. So guys like Miguel would buy bonds, and then they would decide which to bonds and sell which bonds. And as an investor, whatever Miguel does, I'm gonna earn from it. That's how the whole concept, because may limitations din ang bonds. Normally, bonds are, for you to come in, if you're a retail investor, what's the minimum purchase for bond today? 500,000?
It depends, sir. It can be quite significant.
Yeah.
It can be as low as 5,000 pesos
Yeah,
for a
for the
retail
high.
treasury
But
bond.
the big
But
bonds.
for a corporate bond, I believe many of the banks, they don't allow you to invest for less than 100,000. And
Yeah.
I've heard that they've raised it already.
Yeah, okay, so go on. And even treasury bonds. Yeah, you can't come in, I have 5,000. Can I buy an ROP? You can't, di ba? I mean,
It's
diba?
hard. No,
Maybe,
dollar, pag ROP, di kaya.
o kaya
Mas malaki pa yun.
even FXTNs, di ba?
Yes.
Although, so you now have to be able to pull it together. And that's what the bond fund is. Plus, for people who don't understand, there's a lot of analysis and even trading happening in the bonds. That's what a lot of people think, that it's not a buy and hold thing. It's not. It's so active. In fact, like Miguel and I were talking offline, it's actually way bigger than the equities market. As in, like,
Yes.
can't even compare.
Just to put it into
Yeah.
context, like we discussed earlier, an average day in the equity market would be a full amount of maybe 10 billion to 15 billion of trading, maybe less. An average day in the bond market is 20 to 30 billion
That's how
of
big they are.
trading.
Okay.
So it's quite significant.
And the press just picks up the equity, no?
It's the sexier asset class. Equities has always been sexier. Kaya siya yung lagi din sa balita.
And as a fixed income fund manager trader, minsan wala nangyayari, di ba?
Yes, there are times talaga that,
What's
but
the
that's what you
longest?
want, di ba?
What was the longest lag that virtually nothing was happening?
I think I think there were times in the latter part of 2017 where it was very steady.
So boring, no?
But that's what you want. If you're a bond investor or a bond manager, you want things to be kind of predictable.
But
Because
2018, we went through a lot.
very significant move up. So 2018 was not predictable.
And a lot of people lost their shirts.
There are. But thankfully for us, because of the active management that you described earlier, we were actually able to limit losses because we did feel that inflation was going to go up. We didn't know it was going to go to 6.7%.
Yeah.
But
we
thought it
were
was going
thrown a
up.
curveball. I think nobody, well, except for my good friend, Dr. Alvin Ang, was able to pinpoint, hey, Yusek, I don't know how to go. Alvin
The
Ang,
high.
He's almost dead center with his forecast. I don't know how he does it. But pretty good. But it was like everybody was caught unaware with that inflation. And of course, para lang sa alam na iba, when inflation goes up, it is normal for interest starts to increase. Why do interest have to increase when inflation is up? Economics
Well,
101.
yes, exactly. If inflation is at 3%, why would you buy a bond security for less than 3%? You
Mhm.
want to buy at least 3% so that you have an effective 0% rate of interest. Otherwise, talo ka pa sa inflation.
Yeah,
So when inflation moves up, interest rates have to adjust higher. But when that happens, the price of the bonds you're
correct.
currently holding goes
Correct.
down.
Yeah.
But if you're gonna buy now lang, di okay kasi mas mura na.
Okay. So those are the things it moves because they are largely dictated by supply and demand. So at the end of the day, they are now dictated. So active management in bonds. Well, two ways. I mean, if you're very rich, you're like maybe as rich as Miguel. No, I'll just buy
I wish.
100 million bonds and just wait on. There are, by the way, people like that. They have so many bonds, and they just wait on the coupon, the returns. No, they just get it. Doesn't matter. They hold to maturity. I mean, that's. But how many people are like that? So the more the world really evolves, they're actually active with it.
It's hard to guarantee rin that you can do that because you're completely right, sir. If you assume that there will be no default, that
Mhm.
the company will be able to pay you back, then yeah, you can buy a direct bond and hold it to maturity. But what happens if
Or you can
something
buy a
happens?
government security.
Yes. But what happens if something happens? If in 2018, when you thought that you could wait till the bond maturity of 2020, which wasn't that long ago, somebody in the family got sick, or
And you needed
there
money.
was a fire, you need to pay for something. You have no choice. You have to sell your bond holding at where the
Or
market is at that
or if
time.
you're a businessman, there's a better opportunity for you.
Then you would have had to realize those losses, and they would have been quite significant because you were highly concentrated in one or two bonds lang.
So, okay, so that's how pretty much gave rise to why there's a bond fund. Diba? One, not everybody can buy bonds. And two, you want some level of this has to be an activity. And it's very, very difficult on your own. It's just like stock. That's a difference. Eh. Honestly, there's a lot of people who can invest their stocks on their own and do really well. But very few do I see people do that in the bonds. One, because of the volume, because of the complexity. And usually it's an institutional game. And this gave rise to the need for the funds. Pwede na ba ako? Pwede na ba akong spokesperson
Pwede,
ng mga
pwede.
bonds? Okay, so
May talent
basically,
fee.
that pretty much works. And that's the reason why, and then people say, bond funds, they don't honestly, they've been getting bad rep, di ba? So parang at the end of the day, it's really important. If you want a more stability, I would choose a bond fund because they don't do wild. You won't see what happened to the equity market. What? Uh,
40% down at
oh,
the
what's
lowest point, I think.
at lowest point, di ba?
Yeah.
Magkano tayo?
In March,
300.
nag-down 40 yata.
Yeah, yeah. I bought a few, but in hindsight, I should have bought more. But
Yes. Hindsight naman eh.
sabi ni Minijo, don't be a hero. I should have been a hero. Anyway, I bought a little bit, but okay, anyway.
But always risky eh. So you put a little at a time,
But
diba?
we
Little
don't
at a
see
time.
those wild fluctuations in the bonds. I mean,
No,
nothing to
even in
that.
2018, which was quite a difficult year, it didn't go anywhere close to 40%. And I think that that's really the reason why there's a lot of investors also in
Yeah.
bond funds
And the thing
because
with
of that stability.
and you just have to hold to maturity. I mean, longer, and it's gonna recover. I mean, it's naturally going to go back. Diba? I mean, that's the whole nature. It's when the coupons coming in closer to maturity, and there's no risk of default. It's really going back to the price. So it's a more
And
stable
exactly
thing.
that you're earning the coupon over the period, diba?
Yeah,
So
yeah,
even when nothing's happening or if things are down, at least the fund or you are earning
yeah.
that coupon. And then unlike maybe in equities, diba, you're just hoping that the price comes back. Otherwise, nandiyan lang siya. Over that time, walang nangyayari.
Pwedeng hindi na bumalik. Diba?
Pwede hindi bumalik.
Hindi bumalik. Okay, so it's a safer play. It's a safer, less volatile, less risky play because especially and these guys when you talk to them, pag sinilip mo po yung laman ng mga bond funds, you'd see a lot of them are government securities.
Yes.
Yeah, very government securities bias. Is that correct? I mean, they're more biased towards GS.
Yes, and it's for the reason that you said earlier that even though government securities have a lower yield, they are the more actively traded
Yeah.
market. So if you're trying to generate a better return for the investors, then you trade those
Yeah.
government securities which are more active.
And that's the fact that they are liquid. I mean,
Yes, very
says
liquid.
I want to sell, people are always going to buy. That doesn't always.
Absolutely.
That's not always the case with corporates, di ba? I mean, pwedeng
Yes, it
magbenta
can
ka.
be very difficult to sell corporates when you
So,
need to.
mag-iintay ka until somebody buys something like that, no?
Yes, and more than that, you're at their mercy sa price, di ba?
Uh,
Parang
and
kung
then
isa lang yung bumibili.
and you might be carrying a bond that people don't like. I mean, yeah, there's this issue
Yes,
with this company, blah 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 blah, and stuff like that. So very
exactly.
important that sila Miguel, they really look at what should I buy. Wait, they do a lot of analysis. They do a lot of fundamentals. It's a bonds, heavy on fundamentals, no?
Yes, very,
Very
very.
heavy. I mean,
Because at the end of the
corporates, yeah.
day, what you're trying to determine is, on an absolute level, kaya ba ako bayaran?
Yeah, I think more than so there has to be unlike equity, there seems to be a shift towards technicals. Tama ba yan sa bonds? You're more heavy on the fundamentals.
Well, if we're talking about corporate bonds
Yeah,
in the
corporate,
peso
corporate.
side, na hold to maturity,
Yeah.
yes, it's fundamental because you're
I want
trying
to
to
make sure
answer the
that want to
question.
make sure that these people are still there when they mature.
Yeah, exactly. But on the government security side, it's more technical really.
Yeah.
Kasi the fundamental analysis is on the Philippines, diba?
Yeah,
So
yeah,
if
yeah.
you assume that the Philippines is going to be stable, your analysis is really more on technical, where interest rates going,
Oh, yeah,
what
yeah.
part of the yield curve or what bonds do I want to hold?
So yeah, and you heard it no from Miguel. Heavier fundamentals on the corporates, and then heavier text on the because there's really not much to fundamentally analyze in the Philippines unless you really feel that the government is going to be running away with so many things.
It's more on trying to monitor the risks
Yeah,
or whether there's a possibility of improvement. Like
yeah,
in 2010, 2011, the Philippines became a very fundamental story kasi we became investment grade for the
yeah,
first time. And if you, as a local investor, kind of saw that and loaded up already,
yeah,
naunahan mo na lahat ng foreigners bago sila
yeah.
makapasok. So,
And that's okay. So we see those things. So that's the story. Then and bonds are doing it. Now, Miguel, I have this question. How come bond funds like your performance is way ahead of other people? I see like 2%, same bond fund, same concept, same kasi marami po klaseng bond funds. But assuming it's a broad type of a bond fund, middle of the road type. Okay? How can you outperform people two, three times? I mean, why is that happening?
I
Aside from
think
you're a good fund manager, okay, let's be
I'll pass I'll pass your credits onto the team who work very hard really at managing these funds. Um, I think the difference is some of those strategies have maybe very restrictive strategies. Like they only buy short bonds, or they only buy long bonds, or they only buy certain types of bonds. The strategies that we have, and I'm talking about the Solvivo bond fund in particular here, is that it can allow you to take advantage of a lot of opportunities in the market
okay.
when we see those opportunities. So for example, back in 2019 and 2020, we felt nga na interest rates would be moving lower. I didn't see the future naman. We didn't see pandemic or anything
Yeah.
like
You're
that.
only
But
looking at
given
that.
where,
Okay, you're only looking at the rest, right?
yes, yes, given where inflation was, we saw pababa na siya. So we're like, if inflation's going down, let's buy the long bonds kasi yun yung pinakakikita when rates
Yeah,
go
yeah.
down. And that's how we were able to generate those
You
returns
also want
because
to
we
get
were
a
coming
higher
from
return.
very high inflation.
Yeah. Yeah, but when the pandemic happened, you had these bonds.
Actually, we had actually already taken profit, so that means that we sold the bonds ahead of maturity
Yeah.
and locked in those capital gains.
Yeah.
But when the pandemic happened, that's when we reassessed and we said, okay, inflation is probably going to stay here lang, maybe a bit lower. But the BSP may be cutting to support the economy if things get worse.
Yeah.
So that's why we bought long
That was
bonds
probably
again.
a given, no, Miguel? I mean, with what's happening, of course, the economy, I mean, the BSP will cut. I mean, they're not going to raise rates.
Yes,
At
yes.
least, diba? They're not even gonna. They want to be able to do something about it, and we know from an economic perspective that's their knee-jerk reaction at cut rates. That's the easier also, by the way, for those who understand. That's the easiest way. I mean, they can make. They're just gonna meet together, then decide, and then tomorrow they can have a decision. That's the fastest, and for those who understand, labas sa political side yan eh. 'Di ba? They can make that decision. I mean, of course,
Yes.
the
Because they're
deal,
independent. Eh.
but we can make that decision, and that's their mandate. So it's easier for them to do, and that's why it's there. And you were left with, okay, you took profits, but how did you make money pa rin during the pandemic?
It was really you'll recall in March actually, it looked like the bond market was also very negative, diba? I mean, the
Yeah,
whole world sold off then. And the Philippines at that point was no exception sa bond market. I mean, equities went down to
they
negative
sold
4.
because
Just because I think there was so much fear on the uncertainty back in March when we first went into lockdown and
yeah,
where the world was going, that nobody
we didn't
wanted to
know
hold
any
anything.
better. We didn't know any better.
Nobody wanted to hold anything except cash. So
Yeah,
people were selling their bonds. And for us, it didn't make any sense for rates to be that high given the likelihood that the BSP was going to cut rates
yeah,
and that things were going to normalize. So we bought aggressively. We bought long bonds for the funds. We bought 10 years, we bought 20 years. And we thought that maybe in 2, 3 months we'll be right. Luckily, by April, 1 month lang, tama na. So when rates started moving down, the fund kind of made back all those temporary losses and then more gains, and we
yeah,
started taking profit.
it worked. So very important that you take positions that are correct. And of course, that's a thing. Bond funds are not supposed to be safer, but there are bond funds that are highly volatile. Can you explain a little bit? You were talking about, you know, last year's worst performer is today's best performer because of the position. So it can be that a bond fund can take a more aggressive stand. I mean, people don't know that. Kasi pag sinabi mo, bonds, okay, stable. Pero may mga bonds na very, very volatile. That's why they can give you wild returns, but also the risk is there. Remember, there's always going to be a risk-return relationship. For the moment you get high returns, the risks are higher. So I think that's a good thing to point out. There are bonds that are aggressive.
No, definitely. I think that, like we were talking about earlier, some bond funds have specific strategies.
Mhm.
So if you're always conservative, that would have been great for you sa 2018 when rates were going up. You
Pero
lost the least
maiiwan
money
ka
or you
ngayon.
didn't lose. Pero ngayon, wala, di ba? Wala kang makukuha. If you are an aggressive fund, always aggressive, always long, then in 2018, you lost the most money. But now you're making the most money. And us as an actively managed strategy, we don't lock ourselves into short lang or long lang. We're always checking where the opportunity is. Do we
So
need
you're
to shift into capital preservation mode or into aggressive mode because we think there's a lot of money to be made?
okay. So basically, Miguel, if I write that, this is not a function of the fund manager, but the function of the fund itself.
It's a function of the strategy and the fund
Because
managers.
remember, this bond fund is defined as such. So it can be limited by the design of the fund.
It can be limited. So if you're buying a short only, will only buy 1 to 3 years, even if the fund manager sees that I
Wala.
need to be buying long bonds, he can. So
Okay. So that's the thing. And kaya nga iba-iba pa yung mga bond funds. So you have to do a little bit of a check. So is this bond fund this kind of a bond fund? It's just more flexibility, more nimble. Let's I spotlight the bond fund that you manage, Soldivo Bond Fund. It has that mandate. I can take short or long. But that's not the case for all the bond funds you manage, correct?
no, it's not. For example, we have a corporate bond fund which can only be really majority corporate bonds. So even though we knew that rates were going down, um, for the corporate bond fund, we had to stay in corporate bonds because the mandate there is stability. So,
Miguel, if I am
but
an investor, am I better off investing in that kind of a bond fund na very specified, or am I better off with a bond fund that's more nimble, there's more flexibility?
I think at the end, it depends on your investment objective. Because if we have another 2018, for example, the corporate bond fund will do better than the Soldiva bond fund or the total return bond fund, probably because of its design, which is more stable.
Okay.
In a bad environment, it will do better. In a good environment, it will do okay, but not as well as the funds that can act more aggressively.
All right. That's very helpful. So the key is you still need to diversify. Di ba? I mean, to Miguel, no, even if I'm just doing bonds and bond funds, I can still diversify my bond funds.
Oh,
The,
absolutely.
the, the, the common thinking of people, and maybe fault na rin namin mga educators, bond fund and equity. Yeah, but within the bond fund, you still need to, diba? So might be I would get this kind of a bond fund. I can be a bond fund, the GS lang to be secured. Then I can maybe something of this flexibility. So I guess that's something you can do. So again, it's a function of how you understand this. So very, very important that as an investor, you do a little bit of homework, diba? You
Oh,
do that.
absolutely.
And I guess this is the nature why we're doing this video. Okay. And I want to warn people, Miguel's Soldivo Bond Fund and long, what do you call that? Sorry,
Cash crop total return, peso bond fund, and
ang
corporate
dami
bond
yung
fund.
produkto sa Atram.
Yeah. Like you said earlier, diba, parang you need the flexibility of
Yeah.
options so that you have an investment vehicle for all the
Yeah,
occasions.
okay. So that's very important. So you want to be able to consider that. But then it's crazy, I mean, as asking, you can't expect Miguel to give you that kind of return next year or 2 years after every year. It doesn't simply work that way unless every year may nangyayari, which is huwag naman.
Sana hindi.
Huwag naman sana. Okay.
Sana walang pandemic too.
So stressful.
Very stressful.
Okay, so that's gonna the case. So who should be investing in the bond fund?
Um, Honestly, I think that anybody can benefit from a diversification aspect. Kasi yun nga, we were talking about kung may equity fund ka na nag-down 40%, wouldn't you want to be at least part in a bond fund that offset that a little bit by being up 7.5%? So from a general standpoint, anybody can benefit. But more specifically, I guess those that are looking more for capital preservation. Kasi I always tell my team, the first rule of making money is don't lose money. So,
Yeah.
ayaw namin matalo. We can't always help it na may talo, but we're always trying to make sure na kahit anong mangyari,
And there should be
bawiin yung talo.
more wins than losses.
Yes, definitely.
That's your unwritten cardinal rule, di ba? More
So we're
wins.
always trying to grow capital, but the first mandate is really capital preservation. Don't lose the investor money.
Yeah. Okay. And that's the whole game. And that's why people like us should trust people like you. Because at the end of the day, it is also in your best interest to grow the capital. By the way, you guys understand, itong mga fund manager, they get more money when the funds will go bigger. So it is also in their best interest to grow the fund. So it's a win-win formula at the end of the day. Diba? And because the fund is making money, I don't mind paying fees. Correct? Diba? So that's the whole thing that it's not one of these things one benefits from the other. It's actually it's a
Mutually beneficial.
it's a commensal relationship. No, there's always no. It's a mutual relationship for us
Yes.
to be able to do that. Because I'm the side of the investor, Miguel's on the side of a fund manager. Okay, so that's pretty much so it's really for diversification. You can use it now. Moving forward, now that we are seeing signs of recovery opening up, maybe in the next few months you're going back to the office and
Well, sana may konting work from home pa rin.
pero ako, siguro moving forward, side note, I think I would prefer a blended approach.
Yes,
Not that
yes.
options, kasi it's hard to work from home every day for like 8
I
months.
think that's the way forward also. Like you said, a bit of a blended
Yeah.
approach
So we're gonna see you more Makati
at
side.
the office.
At the
Yeah.
office. Nakakamiss din. I mean, let's be honest. That whole vibe of the office kind
And
of
getting out of the house, I
getting
guess.
out of the house. So all this month now we make reklamo about the travel time. Okay. Well, maybe I don't
As
think
long as if we're kind of reasonably sure that the safety consideration
yeah.
is
Yeah.
better, then definitely. Yeah.
So yeah, slowly. So slowly, well, bro, we need to live with the virus. I mean, it's not
Yeah.
something with
Exactly.
all this emphasis on the not. I don't believe that the vaccine. Honestly, how when you get herd immunity, 'di ba? Syempre uunahin,
Yeah.
who gets the vaccine first? I mean, can the Philippines get demand to get the vaccine?
Demand, no. No.
No, we cannot, 'di ba? I mean, and then once the vaccine comes here, how do you gonna administer all of them at the same time? 'Di ba?
I think
So,
realistically, the latter part of the year is what we could expect for some sort of real distribution.
yeah, marginal distribution. I mean, you're talking about crazy logistics here, 'di ba? I mean, to effectively create a herd immunity, bro, you're gonna vaccinate what 80 million people? How can you vaccinate 80 million people in a year or two?
Couldn't even test that much.
Diba? Who's gonna pay for that 80 million vaccines? Diba? I mean, of course, how big is your upper and middle class market who can afford to pay for those vaccines? Yan na, yan na. So that's a
And
reality.
that's
So,
where our question on bond supply comes in also
mhm.
earlier, diba? The government has to pay for it somehow. They need to fund it.
So
They're going to issue.
government will borrow, and we're now in that uncomfortable level of deficit. You know, of course, for the others, no. Yes, the government borrows. We understand deficit, but we are now because the economy is now going down or not growing. So you see the deficit is ayan, crazy, crazy, crazy. So again, that's the scenario. That's the situation that we need to deal with. And that's why people the government will borrow. Okay? Borrow more. And Miguel, you have not seen this level of borrowing in a
I
long
think
time.
although there is that increase in borrowing, there's also kasi that increase in demand, sir, in liquidity in the
Yeah.
market, being brought about by the central bank cutting rates lower and cutting the reserve lower. And that's why you still have demand for these securities, keeping interest rates low. Because at the end of the day, the government can try to issue as much as it wants. If nobody's buying it
Yeah.
or willing to buy it, then it doesn't
Kasi
go
may
anywhere.
pera naman ng tao eh. Hindi lang lumalabas. Okay, anyway, that's another discussion. So,
Exactly.
2021, how's the bond fund market?
I think, well, like you mentioned earlier, are we looking at another 7, 8% year, which we've had for the last 2 years? I think not. I think the probability is not so high now. But I
Or
think
just
we will
being safe?
still.
I just,
Well, to be fair, I said this year 5%, and we're at
yeah.
7.5. But
So these fund managers are always under promising so that they can over deliver. Okay.
well, more of trying to seize opportunities when they're there.
It's hard to be shot in the foot, no?
It's
Okay.
hard.
Okay.
I
Okay.
think next year we go back to a more traditional expectation for a bond fund return, which is maybe 3 to 5%. Because
Okay.
given the current levels in the market, we already discussed we don't think that rates are going to go up very quickly or very much, but we do think that they are going to gradually move up.
Okay.
So I don't think you see those very, very strong returns you've seen over the last 2 years. But 3 to 5%, I think, still quite respectable.
So today's yield is just an outlier. I mean, honestly, it's an outlier. I mean, take
Yes.
advantage if your position. But again, if you did not invest, then that's it. Diba? So
Um, I think there'll always be kind of opportunities naman. It's just difficult to spot as a retail investor. So it's a case for being invested in a bond fund because
yes,
when these opportunities
that's your
do come
job.
out,
Yeah.
we can take advantage of it.
Yeah, that's
Diba?
your job. Okay. Ako as a retail, even if I'm in the environment, I wouldn't know. I mean, I wouldn't take an effort to do this. The fund managers, that's the job. That's the only thing that they do. In fact, these guys have no social life whatsoever.
Especially now, we're just at home, just watching the market.
Worse, no? You're
Yeah,
now just watching the market from the house.
exactly.
Okay. It's a boring thing.
Uh, I'd rather spend the extra 1.5 hours I save from being in
Traveling.
traffic, working. So okay lang.
Okay. Hindi, tsaka marami kayo activity in the past few months eh. Di ba?
Yeah,
So, I mean, compared
definitely.
to you're saying, di ba, the boring months. It's been a good month. So good. I mean, 2020 is a done deal. 2021, realistically, you're still going for what? 4 or 5%?
Yeah, between 3 and 5%, I think quite realistic still.
That's still realistic. So guys, if you want still growth money, you don't want the volatility, the bond fund is for you. I mean, he's managing the Atram bond funds and Soldivo bond fund. Soldivo is actually being managed by Atram. So technically, it's an Atram fund. Okay, so we should have put the logo there at your back. Pagaling.
Yeah.
Anyway, so that's something that's very important. So guys, I hope that this session was helpful for you. Congratulations for performing well. Here's if you're properly diversified, yeah, I lost money in the equity, but you made money in the bonds. Eh. Last question. Okay. Bonds, bond funds, and then there's equity funds. How about balance funds? So I have equity, I have my view, I'll tell you later, but balance funds, is it a good thing? Is it a good deal
I
for
guess
an
at the end it
investor?
depends on your manager because when you buy two types, when you buy bond and equity funds, depending on how much you put in each, you're deciding what your allocation is. So if
But
you have
no,
100,000,
and they're a totally different animal. I mean,
completely.
and
So
then
if
they
you're
never
saying
move in,
that I have 100,000 and I
and
only want to
they
put
never
50,000,
they never move in unison, di ba?
yes.
That's the problem.
Usually, sometimes they do,
Yeah, yeah,
but
they do.
typically, like this year, the correlation is reversed. So because equities were down, bonds were up.
Yeah.
Because
By the
everybody
way,
that was scared of equities, bumili ng bonds.
pero that doesn't always happen. Minsan they're both
Not
down, minsan they're
always.
both up. Weird. Those are
Yes.
weird. But on a general perfect environment, they are inversely related.
Yes.
So when bonds are up, equities are down, and vice versa. So that's how it works, which we experience. Textbook case to. 2020 is a textbook
Definitely.
because I haven't seen that happening.
Actually, yeah. Kasi when you think nung 2019, equities was kind of okay lang and bonds were going up. But that was really because of inflation, di ba?
Yeah.
Hindi naman because of risk. This
Yeah.
year was, like you said, textbook case.
Textbook
Risk
case.
off,
It's
buy
both.
bonds, sell equities.
Yeah, it's a textbook case. So one for the books tayo. So balance funds allows you to do both.
Yes.
But honestly, I have my view, and then is it good to invest if I'm a retail investor? Should I or should I separate it?
I think that if you don't have your own view on whether the bond market or the market will do better, then go for a balanced fund.
Okay.
Because if you don't go for a balanced fund, what you're doing is by default, you're deciding your allocation. So if you have 100,000 pesos and you say 50,000 bond, 50,000 equity, your allocation is 50-50. If you say it's 70-30, it's 70-30. And you have to be the one that changes that.
Yeah.
Ba? So kung 50-50 ka, and then what happened this year is equities went down 10%, and then bonds went up 10%, then nag-zero ka lang. But
Yeah.
if you put that in a balanced fund where the fund manager said, teka lang, equities is gonna go down, bonds is gonna go up, I'm gonna make it more bonds, less equities, then you would have arguably
But
gotten a
Miguel,
better return.
you have to take a look at what kind of a balance fund you're getting in. Di ba? Meron true
Also,
balance,
also.
wherein it's really always going to be more or less a 50-50 thing. Or is it the balance fund that's more flexible?
Yes.
So
You
again,
also have to check that.
you have to do your homework for those things. Just for information for people, because my experience with balance fund is not too great. Because I feel nagahatakan sila in the fund itself. So at the end of the day, I mean, I could have done better if I stuck to bond or stuck to equity in a straight 10, 12 years. Okay? Because maybe the bond fund that I bought is that kind of a bond. There's hindi siya yung bond na flexible. Because I remember I was reviewing a bond fund, and at that time the equities was doing well. It is 80% equity and 20%, 10% cash, 10% bond. So this is not a balanced fund. This is an equity.
That's a very aggressive balance fund.
Diba? I mean, for at 70, that's an equity fund already.
Yeah,
Or
exactly.
you can see the reverse. We're in 80% bond. So this is not a balanced fund. This is a bond fund. So that's something you have to take a look at because the fund manager is taking positions. But again, these are human beings. They're not always correct with their. But at the end of the day, it is in their interest to be correct most of the time, if not all the time. More times, yes. Less
Yeah,
times.
like I mentioned earlier, consistency is what we try to
Yeah.
go for.
Okay.
We try to be number one all the time, but that's not the main goal. The main
Yeah.
goal is be consistent.
And I guess, Miguel, for the interest of the others, no, be careful on chasing the top performers because you might also run the risk that you might be taking a little bit more risk that you do not understand. If you're the top performer today, maybe you're the laggard last year, and it's going to be the reverse. So the top performance this year can also reverse that later on because of the nature. So be careful lang. So I would rather, I love the middle of the road side, di ba?
Although in our case, sir, for the Soldiva Bond Fund, I don't worry. I have no intention of being at the bottom of the pack
Yeah.
next year.
That's why you're Miguel, you're an outlier, no? You mean when the funds were not doing well, you were doing okay. And that nature, you should have done okay also with the but yet growth. So, okay. So, may ganyan. So Diva Bond Fund is an outlier. Okay. And you're because when things were not doing well, you were not doing bad necessarily. But when things well, you were doing better than the others. So
About adjusting the view based on the conditions at the time. Like
only
what we
because the
said
fund
earlier,
allows you to do so.
flexibility. Yes.
Because the prospectus, the design of the fund. So if you're stuck with the no, dapat 80% G, wala kang choice, di ba?
Yes.
Okay. So again, there's a lot. You have to do more than that. It's important you talk to your advisor, you talk to your broker, you talk to anybody, or you do your research. Okay. And Atram has a lot of these videos. I'm just, doing I am not favoring any company, just to be clear. Basta very important that there has to be education before you make that decision. So I personally still have bond funds, even if people says, I live around equity people, Miguel. Okay, my friends who are
Yes.
they're
I
equity
know.
people, they're left and right, but I still maintain my bond fund.
It's a
Uh,
good hedge. You need that because you're a professional investor. You know you need the diversification.
yeah, of course, magagalit wife ko niyan. Pag she's the bond person. Okay, anyway, so tama na yan. Yung hindi masyado okay lang ganun.
Tama siya this year and last year.
Yeah. So, but kasi before, ang corny nung bond fund, parang that's a problem, guys, no? Bond fund, it's lackluster is the right term. People get, inip. But if you
It's
have,
not sexy. It's not, but at the same time, it's more predictable
yeah.
generally.
So,
And if that's what you want, that's exactly what you
so
want.
guys, you play. So again, you can go on a balance fund, know the nature, or you can create it your own. Okay. Personal ko, I would rather separate it. I'd rather have a bond fund. I'd rather have an equity fund. I will now play which is which. I would wanna, I can invest more in the equity. Like today, this year, did I buy? No, I didn't do anything with the bond funds. I did more equities. Why? I was taking advantage of the opportunities.
Yes,
When
absolutely.
I make money, maybe shift na natin. Shift na
Yeah.
natin. Yeah. So
Take gains.
yeah. So a good way to do it, strategy wise, is when you're investing, equities is a good, but maintain that portfolio for bonds because you want that stability also. Okay. But when you've made your gains, maybe it's time to move it to bonds. Let's say you're nearing retirement. I'm in my 50s, Miguel. So now thinking of something, okay, do I still want to do it? Maybe at 57, 58, shift na natin. O Miguel, alagaan mo yung bond fund ko. So,
Ah, for sure. The team
so
will
yung
take
mga
care of
ganyan,
that.
di ba, gets that sa point because it's a function of also what's important for you. All right. Miguel, what are your thoughts for 2021, 2022?
Well, we're very hopeful. I think that
This is not an official statement, so don't worry. Fund managers are the safest people to talk to online. Offline, it's a different story. Don't worry, I have not recorded. Joke lang, joke lang. I just like to,
ba't nakabukas yung recording light?
mas masaya yung offline discussions. Fund managers, mas masarap kausap if it's not recorded. Okay. But basically,
Right.
what are your thoughts for 2020 and 2021, 2022?
I am quite optimistic. I think what we discussed earlier is true. That to think that a vaccine will be widely available right away is unrealistic. I think maybe latter part of the year pa. But I do hope, I do think we've seen the worst of it. I do have relatives, some medical industry who say that even if things aren't that much better, they're not naman worse, diba? That,
Yeah,
and at
yeah.
least now we have some idea of what to expect kaysa sa back in March na anong
Yeah,
gagawin
yeah.
natin dito.
Yeah.
So given that,
We're learning
I'm
to live
hoping
with
na
it.
mag-improve.
Yeah, we're learning to live with it.
Yeah.
Yeah. Okay. So and that there's still opportunities for you. What are your biggest opportunities for 2020, 2021? As a fund
Honestly,
manager for fixed income?
well, in fixed income, like I said, I think that even though rates will not go up significantly, they will go up. But there will be, I think, a lot more volatility in fixed income in trading terms for 2021. And historically, that actually is the type of environment that the team and I have been able to do
Yeah.
better in.
So very important when you see volatility, you want to be able to
Take
choose
advantage. Yes.
a more seasoned team. Okay?
And I'm older than I look, so I do
Yeah.
have some experience.
Yeah. That's a disadvantage. Bata-bata naman yan. He's not that young. He's not that old. He's not that young. But anyway, so we've been doing that. And you run a team. Okay.
Yes.
Okay. So with that, so personal questions. Where do you invest more? Fixed income or equities?
Well, right now, sir, I'm paying down a mortgage, so I don't have a big investment anywhere. Actually, right now, more of my investment is in some of the bond funds, of course, that I manage,
Yeah, okay.
and the money market fund for my monthly amortization. Although money
Okay.
market funds don't make you much right now, but
Yeah.
I can't
Okay.
afford the volatility kasi my monthly yung bayaran, di ba?
Okay. Okay. So you're investing in your memories and stuff like that. Okay.
Pero if I had more money right now, I honestly, I mean, I'm a fixed income head, but like you, I would put more money in maybe equities right now, just because your potential upside is better right now.
But but most people are not like that. They like the stability. So, and that's the reason why the bonds are, bond fixed income is way bigger than the equity market. And hopefully the bond market also grows. That's not the same for the equity market and the bond market din kasi, di ba? So we want to be able to grow the bond market. We feel that the bond market is, I feel it's underserved. The investor are very, very underserved. So we want to come up
Definitely.
with videos like this so that people can consider, should I go in a bond fund? I think you should. Well, at least half of what your investment, you put it in a bond fund. So
I think it's like you mentioned earlier that people don't realize that the bond fund is actually much bigger than the equity. Sorry, the
yeah,
bond market is bigger than the equity market, more liquid. It's just, but because everybody kind of thinks equities. So
yeah. And with a 7-8% return, hey, that's not bad. I'll go, be careful lang, sabi ni Miguel, don't expect that for 2020. Wow.
well, if I,
Ang bilihan
hopefully at the
sila.
end of 2021, I'm saying, well, we made
Yeah.
another seven and a half
I,
percent,
to
but
be
I
honest,
don't know.
beginning of the year, Miguel said we're going to experience 5% return. Okay, so, okay, so there's opportunity for that. Parting words, Miguel, for our listeners or
Yeah,
watchers.
just to the fund investors, thank you for putting your trust in us, and I hope that we continue to be able to be worthy of that. And to anybody that's been on the fence about investing in bond funds, like Randall said, I think no time like the present to be able to diversify your portfolio.
Yeah, always diversify. I mean, it's not an issue of should you. It's an issue that you should, and it's an issue that you should do it always. So I'm gonna put links for atram.com.ph down there so you can check it out. Miguel Liboro is the head for fixed income. He's in charge for Atram Soldivo funds, both in the mutual fund and the UITF. You're one of those weird organizations that you carry both. Anyway, so
Yes.
it's
That
crazy.
means we're doubly regulated because both the SEC and the BSP
Yeah.
audit us.
Oo nga, ano. And you can't have two sets of books, right? So also that's very important. And then you guys are also proponents for Seedbox, no? So they
Yes.
can actually check on Seedbox. So you can check all the Seedbox and all those funds that Miguel is mentioning are there, particularly of Atram. And with that, thank you very much. So the next video that I'm gonna invite you, I'm gonna do 100% Tagalog for you. So be prepared.
Kaya-kaya. Kaya-kaya. Pero baka matawa yung mga ibang tao dyan sa accent.
Okay. All right. With that, thank you very much and see you around. So if you
Thank
have
you,
not
Andrew.
subscribed to the channel, please subscribe and God bless everybody. Bye, Miguel.
Thank you. Bye.